The third quarter guidance is in focus because the company has difficult compares as we get through the back half of the year. Best Buy's done really well for really long, but they did particularly well in the back half. So inevitably, the rate of growth from this business is going to slow. And that's why there is an inordinate amount of focus on the back half, and in particularly the third quarter.
What is Best Buy doing right to be able to drive these kind of numbers?
Best Buy's doing a lot of things right to drive these numbers. They're growing online, they're growing in-store, their product availability is really good, they're benefiting from a very healthy consumer environment, some strong interest in the product set that they sell, their customer service has improved, they said their net promoter score has gotten a lot better, so they're doing a lot of things right. It just so happens that a lot of that's already reflected in the stock. It trades at 8 times EBITDA, which is towards the high end of the range. So we think the stock takes a breather here for a bit until we see that it can sustain its rate of growth.
It seems like, Mike, I mean, is there something about the third quarter specifically and taking down guidance for the third quarter that is especially troubling? I mean, I'm thinking this is a back-to-school period. We have the potential launch of a bunch of new Apple products coming in the fall. I mean, these two things alone should be enormous catalysts for a stock like Best Buy, and yet they take down the guidance.
Well, what we've seen as a theme throughout this retail reporting season is that there's been very healthy top-line growth as spending has remained strong, but the flow-through has not been as strong. And that was pretty consistent with Best Buy's outlook for the third quarter, where it's projecting that its same-store sales will continue to grow at a very solid rate, but its flow-through is not going to be very good. And that's what the market is in part reacting to.
So you think this is a reasonable pause in a generally upward trajectory for this company? It's been at all-time highs lately, I mean, obviously.
Yeah, Tyler, over the long run, the consumer electronics is probably a flattish type growth sector. So it's not going to grow, it won't decline. It will be incumbent upon Best Buy to continue to take share so it can achieve some growth. What we saw in the most recent quarter is that its rate of share gain, both relative to the broader specialty consumer electronics channel, as measured by some industry data, and relative to the mass merchants, Walmart and Target, its outperformance versus all of those competitors slowed. So it will be harder and harder for Best Buy to outgrow, take share, and in turn outgrow the market. That's what the market's really focused on today.